whether the Fed is doing too much, and they're going to break it. It's just a matter of when, not if. What are your thoughts?
Well, first, I want to go back to the comment made earlier of buying a stock at 60 times earnings as opposed to 20. When money is free, remember, we had a zero interest rate regime for the longest time until recently. You can discount the present value of future profits, future cash flows, mathematically to infinity. So I think a lot of this correction is the realization that money's not free anymore. And with the 2-year above 4 and the 10-year at pushing up in that direction, you now have to look at things if you're going to determine underlying value and time according to a different hurdle rate. That's what's taking place here in the market. We have a generation of investors, and I'm not talking about the panelists here because they're mature, but who weren't even in the business in 2008, 2000. So I think this is a real problem. We're going through this adjustment. Money costs something right now. What does that mean? There's an opportunity cost to going elsewhere. And that's what's taking place right now. And it's not over. I do think the Fed will continue the job.
So expand on that, right? When you say it's not over, to what degree isn't it over?
Nobody knows. Nobody knows.
But the Fed thinks they know where the destination is, though, right? The Fed thinks they know where the destination ultimately is going to be. It seems the question is, can they get there?
Scott, when you plot the dots, I'm a retired dot. I plotted dots the entire time I was there under Ben and under Janet. You have to come out at 2% inflation over the long run. That's a given. So then you go back from there, and you have to figure out the glide path to get there. I wouldn't look much past the immediate future dot. We know where they want to take funds. As was pointed out earlier, it's a median to 4.4% by year end. Could well be higher. And definitely in next year, it could well be higher than 4.6%. It's a numerator-denominator issue. One is the Fed funds rate, and the other is how far inflation comes down. That's the numerator. And as Powell has said and others have said, the neutral rate is when you get to a real rate slightly above zero. We're far from that right now. And until they feel they're getting there. And the one last thing, inflation is not a light switch. It's a dimmer. It takes time to work its way through the real economy.
Well, that's one of the key criticisms, though, right, of the Fed at this point, is that from those who suggest they're doing too much too fast, they're not letting the dimmer effect work on the hikes that they've done. The lag is tremendous, and it takes a long time. And they've done a lot. And they're not patient enough to wait to see what happens.
You know, still money at 3 to 4% is dirt cheap historically. So I don't think they're going to stop. I think they are front loading as much as possible. There is a lag, as you pointed out. Let's say you're a woman running a company. You're trying to figure out, do I accelerate my receivables, lag my payables, all the way up through CapEx and everything in between, inventory management, et cetera. That's why it takes time to work its way through the economy. That process is underway right now. Their reading is that the labor market is so strong. We have the Phillips curve is back. We have a wage price spiral, and they have a lot of leeway. And they're going to exercise that leeway. You know, Jay Powell keeps a book right in front of him on his desk. It's called Keeping at It. That's Paul Volcker's popular. And if you notice the speech at Jackson Hole, he used the term keep at it twice in that speech. So he doesn't want to be Arthur Burns. He doesn't want to go down as not having slayed the inflation dragon. Might they overshoot? Yeah, I think they might. But I don't know if it's a certainty.
Is your base case a recession or no? And let me ask you this. Before you answer that, I think a better question would actually be, to what degree would they tolerate it? It almost feels like they will tolerate what they think can be a mild recession, because it's the only way, at minimum, that this is going to crack.
I think this comes down, guys, to the labor market is pretty clear. How far are they willing to take it? We have historically low unemployment right now, 3.7%. You know, all the data on the wage ratio and all this stuff, and there still are too many jobs open to relative workers to take it. I gave my last speech in 2015. I gave over 100 of them when I was at the Fed over 10 years. The only one I ever asked permission from the board to clear was my very last speech. And in it, there was a line, which was, we feel at the Federal Reserve that the non-inflationary flex point for unemployment is 6%. Now, we've made a lot of progress in terms of harnessing technology and everything since then. It's somewhere between where we are now and the mid to high fives, in my view. And I think they're willing to go in that direction. They'll get political heat from the Congress. I know for certain Mr. Powell and the committee could care less what the politicians say. If they don't stop this inflationary impulse, they don't bring that horse back to the barn, which they let out based on their transitory inflation thesis, they will go down in history as having done a crappy job.